And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Thursday, August the 23rd. Hope things are going well for you. We've got some information, and I'm very excited about today because we've seen an opportunity that we talked about, I think, yesterday on the recap. You're going to see this shortly. Welcome. I'm John Hoagland. Thanks for trusting me with your time. As always, it's all about context, good risk management, and infinite patience. Be ready for anything today. We had some numbers come out. We have the Jackson Hole Symposium going today, and we await for Chairman Powell to speak to us tomorrow at 9 a.m. about what they've been talking about. But you never know when things are going to leak out and when things are going to change. Be ready for it. Speaking of things this morning, the eco numbers that were due out this morning, 7:30 Central, the GDP preliminary, kind of a revisionary number came out. They were looking for 6.7, came back a little lower than that, 6.6%. Nothing too earth-shaking, but did send a little bit of a chill into the equity markets, as well as jobless claims. They're looking for initial jobless claims to be 350,000. Came out 3,000 more than that, 353,000. The continuing jobless claims also higher than expected, and they were also both revised higher from last week's numbers. So little job problems going on there. The U.S. stock indexes were kind of set to open mixed prior to the early economic numbers. They've taken a little bit of a look to the downside. Korea apparently has tightened monetary policy. The Bank of Korea raised rates to 0.75% from 0.5% in apparently a surprise move. Crude consolidates after testing key technical levels yesterday, despite some draws on crude stocks here in the U.S. and gas and crude oil. And of course, the Fed symposium hits high gear today. Headline risks may be high. We'll have to make sure we are using stops and trading at places that are close to points of invalidation. And we found one of those this morning in gold. We don't know if it's going to play out for much, but it certainly played out initially right off the bat here. So I'm going to say, make sure you smash that lucky like button, share, comment, question, feedback, and heckling are always welcome here. Make sure you subscribe to our YouTube channel so you can get notification when we do go live. VIX up a little bit this morning, about 2% higher than the close yesterday at 17.25%. Last I checked, dollar index still holding just under 93 at 92.96, and a little uptick in the yields. Ladies and gentlemen, we were looking for that. We saw that yesterday, a little bit of a continuation of rising yields today, 1.37%. The current yield for the 10-year note. And I'm going to say good morning to everybody as usual. Good morning, Brian. First in the room, you win the prize. Drew, good to see you this morning. Vince, always a pleasure. Janus, Tone, good to see you. Ed Nelson, good to see you. George. Good morning, Tanya, always a pleasure. Stack some bananas for us today, will you? George Adams, Jim Wolf, Caesar, good morning, Laura. Bill, Jerry is awake. I hope I am too. Joe the Future Scalper, good morning. Stephen Lee, Nico. Dustin, hey, are combine traders limited to only 10 days of historical data? No, it depends on the platform, and I know that Tradeovate gives you like 10 days on the 30-minute chart. We just have to go to the daily after that. Jason, good morning. Ryan, Keith, good morning. James, good morning. NM, good morning, ladies and gents. Mr. Magallanes, a visit from the chef here today. Good to see you, Mr. Magallanes. I hope things are going very well for you. Trading Research, good morning. Rob T, Deanna Floyd, Wahoo, Greg H, and Andres. Good to see everybody this morning. If you're new to the market forecast, welcome. We're hoping that you're going to find something useful for you today and on trading days moving forward. I think we may have found one. It seems to be holding, at least for now. It's going to be interesting to see if it's still holding when we get to it. That opportunity is in gold. Good morning, Iskander and Frederico. Good to see everybody. Saw a friend of mine in the recap yesterday, Deanna from Market Stalkers. It was good to see her saying hello to everybody. And why don't we jump into the charts? Let me get them set up. I've been kind of watching this thing in gold, and it seems to be faltering a little bit now. Let's take a look, as always, starting with the daily in gold. Excuse me. Crude oil. Just getting things set here. You would think I would do that before. All right, let's take a look. Daily in crude. So, took a good look yesterday up to that weekly kickoff high, that 68.60. And we were unable to get to it. We were unable to trade above it. Just going to make this a little bit bigger. We did add 12,000 in open interest on that stab up at that level. That to me is a little bit encouraging. We've been seeing the crude oil losing a lot of open interest over the last, basically the month. Yesterday represents the first addition in open interest, and it was partially due to rollover. We have to be aware of that. So volume held up pretty good yesterday, increase in open interest. As it approaches resistance, how is it doing at resistance? Not seeming to be doing so well. We did have information yesterday that probably helped us get to that level, but this is going to be a hard level for us to get through. These are longer term inflection levels. So I'm going to be kind of patient and waiting to see what happens up there. We do, however, have a late spike situation. We're going to see that on the 30-minute chart. So far, though, in the extended trading hours, we have an inside extended trading hour range. Here's the 30-minute chart. So here's our late spike. All right, so the market started off to the downside, of course. We traded basically relatively close to the value low from the previous session. Buyers came in and moved this market higher, and there was a big push at the end of the day that left us this late spike. Now, when we have this, it's important to notice where the market opens the next day. The next day, that's going to be today. We are opening below the late spike, which is an indication of a rejection of this auction to the upside. This auction never really got a chance to show us yesterday because it ran out of time whether it was going to be accepting of price. When we open below it, that's a sign of rejection of higher pricing. So, right now we are holding some short inventory, but we're right in the middle of value. So I'm going to try and stay very patient today, and perhaps if we do get the opportunity up near this weekly kickoff high, that would be an interesting opportunity for us. But as long as we have not accepted above that level, I'm starting to think that we want to start to look for rallies to sell. The base of the late spike is going to be a suspect level. Basically, that late spike base is approximately 68.15. There is no definite single level where we're going to look for that opportunity. Everything in futures is a zone. So we got up pretty close to our weekly kickoff zone yesterday. We weren't able to get to it. Sometimes that's good information. But inside value, inside range, a little bit of overnight inventory to the short side might give us just that push to give us that opportunity to look to the base of the late spike for an execution. I love the late spike days because they just offer a clear signal or a clear probability as to what might happen. So far, rejection of higher pricing close to an inflection level. I'm going to be looking, I think, to try and find good levels to manage risk and look for opportunities to sell strength. S&Ps. Yesterday, as the day went on, we were suspecting an accumulation with an up day. You would think that accumulation would be to the long side, and we did add 12,000 in open interest yesterday. The problem is the volume. We'd had very low volume. Volume even in the New York Stock Exchange was off by sometimes yesterday 10%. Lower volume on new highs is not indicative of a healthy auction. Now in the futures, we kind of expect it. We don't bring a lot of volume on the upside. Right? If there's a thing that we can take from this is, well, we are holding above weekly kickoff high, 44.80. That's a level that we've been looking to test for a number of weeks. Now, we are holding above it. Our overnight last night was right to it. It is supportive. But the question is, are we bringing in volume? I'm going to be watching New York volume today very closely. I think there's a reason that the volume has been so close. The GDP and everything that came out today, and the Jackson Hole Symposium. We don't know what's going to happen with that. So there's going to be a lot of posturing and hedging probably by our bigger money traders. And that may be why there's less participation. There's less volume because they're hedged. They're where they want to be for the next 2 days. Probably not a whole lot of activity. So there's always reasons and good things and bad things about everything we look at. It's kind of up to us to think about, okay, what's most important? Well, to me, what's most important right now is the fact that we did open, that we added some new business to the upside yesterday. Tells me there's still business out there to do. And we are holding above this weekly kickoff level. So, while I think we need to be cautious, we need to, be very, very patient today. I think that's going to be one of those days where it's going to be hurry up and wait. And tomorrow morning might be one of those as well as we wait for information from the Fed. So we did have some overnight. Let's take a look here. Okay. Hey. That's enough of that. All right. So here's that weekly kickoff level. I mean, once we got above it, we've been testing below it, but we haven't really shown any acceptance. We've got 2 days now of closing above it. We've had a decent move to the upside that brought in open interest, so that's kind of healthy for the upside auction. Now we are looking at do we have any overnight inventory in this? Probably not. Okay, settlement is up here. It's 44.93 even. We did get a little bit short in the overnight. The London session took us back to settlement, which kind of evens out that overnight inventory. Okay, Dustin. Oh, good. So if you turn off the volume profiles, it expands the chart to more than 10 trading days. Interesting. I didn't know that. Thanks for telling us that, Dustin. I wonder why having the profiles on there makes such a difference. Well, I don't know. We'll have to find out. Anyways, back to the S&Ps. We were, when the number came out, we were right at settlement. There was no overnight inventory at that point. The numbers came out. We had a little bit of a knee jerk to the downside, but nothing too tremendous. If we're looking for opportunities today, we're inside range right now and inside value. I'm going to try and stay patient. I'm going to look for opportunities as the day goes on. Probably if I get that opportunity down near weekly kickoff low, I'll probably take it. And we're just looking for opportunities to limit risk is really what the goal is today. I don't want to risk too much I don't want to get myself hurt today. I want to make a little bit of money and be happy with it. Let's do this. Good morning. Fed's Bullard. We have a lot of inflation in the U.S., more than expected. Dun, dun, dun. All right. NQ. NASDAQ. The market that gives me heart palpitations. Okay. Volume was okay yesterday. Very small range. Where were the new buyers, though? This is an area where we should be looking for continuation. We should be looking for momentum. But of course, the news has everybody kind of on their heels and on hold in these markets, and it's holding relatively well. We added 600 in open interest yesterday, kind of moot, but I like the fact that we had a little bit higher volume and a little bit of higher open interest. It tells me there's still possibly some continuation in this auction that's left. Short time frame upside structure still intact for now. Of course, there we go. So now we're in 3 days of balance or indecision. I don't really have that much to talk about in this because we're just kind of hanging here. We're not really doing that much. And of course, we have new information coming out. Here's the 30. Just giving me problems here. So basically, 2.5 days of consolidation. We've got some overnight shorts in this market. Settlement is 15,364 quarter. We're still holding some overnight shorts. We are teetering on actually opening the NASDAQ with a potential downside gap. We've got about 13 minutes here before the U.S. equity open, and if we start to open with a gap, that's information. If we can't close that gap relatively early, we'll be looking for perhaps a little bit of repair from Monday's move to the upside. It's a long ways to go before we're going to find any naked points of control. All the way down here is the first one that I see. We're going to have to go considerably lower for that to come into play, and I'm not thinking that's going to happen without some sort of news impetus. So I'll be watching the open, seeing if there's a gap. If the gap isn't closed relatively early, I may look for this market to pull back to the downside. If it comes back and reaccepts inside range and even inside of value, short bets are off, and we may see this market rotate back to high of value. But anything is and crazy is possible, of course. So here's gold. Here's the daily chart. So volume was a little bit higher off of the resistance level. 1807 to 1809 is that range we've been talking about. We lost 5,700 in open interest, so that's a little bit of long liquidation. That's going to take some selling power out of the marketplace, actually. Short time frame upside structure is still intact for now. Inventory should be about even in longer time frame. We've been consolidating. We've taken a look higher. We've taken out those longs. We're centrally located in weekly kickoff range. Short time frame control is likely. Here's the 30-minute chart, and here's the thing I was so excited to tell you about and take a look at. We had really no overnight inventory when the numbers came out. When the number came out, it knee-jerked lower right to the upper trend line of the bull flag that just broke out this week. Okay, so I think we talked about this yesterday in the forecast because we were trading up here and we were looking at an opportunity to look for a long against this trend line. We talked about it yesterday that on the recap that this is actually what happened, and we may get another opportunity down the road here to see another chance at looking at this as a potential execution level, and we've been given two this morning. First, right to it, then a little bit through it. Remember, everything is a zone in futures. There's nothing finite as far as a perfect level. Sometimes we might get lucky and hit one of those, but I'm excited because I've got this opportunity down here. It gives me a visual level of support, and it also allows me to limit my risk. Risk limitation, important. Now we're back in value. What's going to happen the rest of the day? Will we stay in value? Will we rotate? Will we reject value? Will we get through value and look to points higher? All of this is unknown, but at least we've found a level that has given us a good opportunity to limit risk and is paying us right now. So the next time you see a bull flag that breaks out, extend the upper trend line, and if price comes back to it, it can be a pretty useful support level. I love it when a plan comes together. And the euro, I'm getting a little bit long-winded here, I think. I apologize. I tend to do that. I put Dan's dog to sleep all the time. The euro. So over open interest yesterday on this breakout, a continuation above weekly kickoff high was disappointing. We added 600, not too much. Volume is holding, but nothing tremendous, nothing to write home about. We're looking at a potential stage 2 breakout today above this trend line. We were pretty much right at it when the news came out, and that was it for that. So we got an opportunity perhaps to look for a long near a support level that should be the weekly kickoff high. Take a look at the 30-minute chart. And I don't remember if this is accurate, if this is last week's high. Let's take a quick look. Oh, no, this is a weekly. Well, that's a naked point of control that we traded to, but unfortunately, in the overnight session. So, this is a market moved by news, of course. That's what all these markets have done. We did not have any overnight inventory. We may be getting a little bit short here in the regular trading hours session, and the market has traded right down to the point of control from yesterday. It did open outside of range and outside of value. If we spend too much time inside value, I would look more like for opportunities closer to the low of value and our weekly kickoff low. We reaccept inside of value, there's a pretty decent probability that price could come back all the way to the low of value. So that gives us that potential opportunity down there. One last thing. We also had a late spike in the euro last night. We opened in that late spike. Is that going to prove to be indicative of acceptance of higher pricing? Right now, it looks as though it's rejecting in the regular time frame, but it's when the market opens in or above the late spike that tells us that the market is likely accepting higher pricing. So there's a little bit of cognitive dissonance in this, and if I get the chance, I'm probably going to be looking to buy something that I can lean on because the market opened in the late spike. It marks acceptance. Just some news came out, took out that acceptance, but as traders forget about that, we may see this market come back and recheck these areas, these levels, this late spike. All right. Now let's take a look at the 10-year. Okay, so yesterday, we had our weekly kickoff low as well as last week's low penetrated and accepted below. We added, I think it was about 79,000 on the day before. Yesterday, we added 133,000 in open interest. That's new business. That's new sellers coming into this market. This is appearing to be a pretty healthy downside move, at least so far. Higher volume, increasing open interest. I would say that this market is more likely to look to the downside. Now, we've got this swing low back here, which may be somewhat supportive. That's 33.09.5 ticks. Okay, we're getting relatively close to it. This might be a little bit of a hiccup for us, but if the volume and open interest continues to come in on down days, it's going to be a healthy downside auction. And as rates continue to kind of creep higher as they have been, it's it would almost be a foregone conclusion, but it doesn't make day trading it any easier. So here's our breakout yesterday of the weekly kickoff low. Here's where we added that approximate 133,000 contracts in open interest yesterday on a move to the downside. It was a dead cat bounce by the end of the day. We didn't really have any overnight inventory before the numbers came out. We opened, there was a little bit of a gap, but we closed the gap to the tick initially, so that took out the gap rules. Now we're just kind of holding down here, seeing if we can accept below value from yesterday. If we do, we'll look for the market to kind of continue to push to the downside. If we can't, if we get back and we re-accept inside value, we could see a pullback towards value high and another test of the weekly kickoff low, which was supportive, may become resistant. Okay? Okay, what do we got here? We got about 4 minutes. So let's see what kind of questions we have here. Can you tell if there's overnight inventory to the short or long side? Chris, the way to do that is know where settlement is. If price moves away from settlement in either direction, let's say price moves higher overnight, you can make that assumption then that the overnight inventory is holding long positions, and it's usually going to be weaker hands, pea shooters like me that are doing that. So you know it's not real strong buyers or real strong sellers. All right, Fed's high inflation and gold moving lower makes you wonder. It really does. And you know, former Vice President Joe Biden's son is saying people are using Bitcoin to store value and leaving gold. Research Indian youth. They are the movers right now. So yeah, that's one of the things that many people are talking about, is that the Bitcoin is the perhaps the new store of value that gold has traditionally been. I have trouble trusting it because I don't know, maybe it's a generational thing, but so let's take our deep breath. Be ready for the trading day today. I'm going to try and remain patient, grateful, humble, and creative today. Looking forward to having a good day. I will be with you again for the market recap today. Dan is going to be busy, so you'll be stuck with me again. I hope to see you there, and I hope that you have a good trading day. Don't forget to say a prayer for world peace and all those who aren't where they want to be today. And get out there and profit. Trade well today. I'll see you in the pit.